And the bottom line is the private credit market has now become much more systemic, and we're using the BDCs, the Business Development Corps, as proxies, just because we have data and information there, and found very strong evidence that the private credit has become much more systemic over time. I do want to point out one key thing here. When the economy, it's the obvious thing, but it's important to get it out on the table. When the economy is under stress, and if it's under stress for an extended period of time, and that's what feels like it's going to happen here, things go off the rails. Things that you can navigate through, if they're temporary, you can't navigate through. And I worry about the debt of non-financial corporations that have been levered up via private equity, and private credit. And you can see the stress already developing. Go take a look at distressed exchanges. So these aren't defaults. It's where a company's having trouble making its debt payment, goes to the private equity firm and says, "Hey, look, I'm not going to be able to make it." The private equity firm doesn't want to push the company to default, because then they have to mark down their asset holdings. They work with the borrower through these distressed exchanges. One example would be, take the interest that you're not paying, just roll that into the principal. So your principal amount starts to rise and you get a reprieve until. Now you'll do that when you feel like, you don't have this fundamental problem with the sales of the company. But if we get into a weak economy, which we are, or a recession, which we might, sales are going to weaken, and these firms, private equity, private credit firms, are going to say, "I don't think this is going to work out," and they will start pushing these. Did I tell you distressed exchanges are a record high? They'll start putting those distressed exchanges into default, and that's when you see the job loss. That's when they don't default in distressed exchange. They default when they default, they'll start cutting jobs and investment. That's recession, and it could become a systemic issue. Just given what I just said earlier, a much broader problem for the financial system, and that's when this thing goes from being kind of a garden variety economic downturn to something that's much more serious than that. That's not my baseline, but that is certainly a downside scenario that people should consider.
So one channel is the job loss. That's what you mentioned. Is there also a channel through the banking system?
Yes, through the broader financial system, because you got banks now providing credit to providing leverage to the private credit firms and private equity firms. So they're getting levered up and are more exposed. And then you've got a lot of insurance companies and pension funds that are, their balance sheet is stronger, and they don't need to look, there's less chance of a run, but it doesn't mean that there won't be a lot of stress there, and that could create other effects around the financial system. So yeah, I think when I say systemic risk, I mean the problems in the private credit market bleed out into the banking system, the pension industry, and the insurance industry. I'll just, I don't know, I can't tell you explicitly what that will be, but it's something along the lines of what happened to the UK back in 2022, the Liz Truss event, where you saw the markets under stress, and it caused an exotic investment vehicle used by the UK pension funds to blow up, and that created a financial crisis. That's the kind of thing that I think we need to be worried about.